Hey guys, this is Fernando again, Southwest Florida, New Jersey. If you got a property anywhere in the United States, let me know. We can get you a referral down there. It is Friday. This has been a long week, so let's talk a little bit about interest rates. Okay.
Whatever.
Yeah. You can just cut it. Okay. Just remember we can do that real quick so we can just go straight through. Hey guys, this is Fernando. Again, your local realtor down in Southwest Florida. Give me a call. Let me know if you're ready to sell your properties. You want a listing agent like myself to get it done and taken care of you. We're going to talk a little bit about interest rate. This video is going to be a little longer, so we might have to cut it in a couple different formats. Number one, yes, interest rates keep going up, meaning that less buyers on the market. It also means that it starts affecting the prices of homes. It does have an inverse effect, but there's things that we should be looking at. Okay, we're still in a seller's market, quote unquote. The problem is that the news is reflecting positive and mostly negatives. Okay, so when interest rates going up, of course there's going to be less buyers available because it'll knock them out in their purchasing power. With that being said, there's still a lot of buyers. So our monthly inventory, every area is localized, but right now ours is about 2 months. So we're still in that seller's market. Buyers are a little bit more skeptical because of all the news. So they want some more of the negotiation, no more cash, above asking price, waiving all inspections and appraisals. Those things are kind of fading away, if not already. So let me show you real quick what happens. So let's assume that 2 years ago we're at 2%, 2.5%, right? So 2% interest rate. Let's assume $2,400 is what we're approved for buying a home. Okay, where's my phone? So I do like using a calculator for certain things, mortgage calculator specifically. Let's assume we're at 2%. We want to be at $2,400 in payment and 30-year fix, so forth, so forth. We're just going to do principal and interest. We're not including taxes and insurance. So if we just doing strictly at that, those numbers are crazy, so that's not going to work. Oh, I know what. We're going to use 5% down. Is that right? Okay. No, I can't be right.
Do you want me to pause it?
It doesn't matter. I mean, you can always cut this later. Just this is live, so this is kind of looking at the sense. All right, so this is crazy. I have to check these numbers real quick. So if we use a 2% interest, and we're going to use some make-believe numbers here, okay? And the let's say in this area here, let's do 6,000 in taxes for a higher price home. Okay, it goes up depending where you're at, right? But we're just using for make believe numbers. So let's gonna use 6K for taxes. Okay, let's gonna use 3K for insurance. Okay, we want to keep our payment about $2,400. So let's change this to 1,500. Okay, so our PI should be about 1,650 plus the taxes broken down, and I think it's going to be about $2,400 with these numbers here. And this is just a very rough estimate. This will give me a purchasing power, actually technically, because the interest rate is low, you use it as a seesaw effect, then your purchasing power will be about 400, almost 470K. Okay, so that means at 2%, if I'm trying to keep my payment at $2,400 a month, I can purchase a property up to $470,000. If I increase that to 6%, okay, and if all we did, all right, let me try to use a different color here. If now this is 6%, okay, the interest is higher, your purchasing power drops. So your purchasing power to keep this 470,000, okay, at 6%, your new monthly payment will be now approximately $3,426, okay? That's a big difference. That's $1,000 more. We are creatures of what we can afford. If we can afford $2,400, we like it, it's nice, we'll pay the $2,400. Ironically, that's about giving rent right now in certain areas. So if we're forced to say that, hey, I can only afford $2,400, and today's interest rate, and I don't know what the interest rate, this changes, but let's make believe it's 6%, then that means for me to keep this the same as this, if I'm that buyer, then that would change everything for me. So that would mean that I still got to come back here, and now my new purchasing power is 289,000. That's crazy, right? So at one point in time, this is why the rates went down. Everybody was able to start buying. The people that didn't buy, didn't listen, didn't hear us, didn't understand this. I just bought a lot more property for less money. Now, sellers are trying to sell this now at 470,000. We're at 6%. That's 3,400. We lost a lot of buyers, so that means that now we have less buyers that are able to afford this here. So the people that are actually going to buy has to be able to afford that number, not this number. This number. So once upon a time, I might have been qualified, but for me to get this monthly payment, now I'm only qualified for here. Crazy. Now there are still buyers because they can't afford it. They want to be in that location. They want to be there. And the only difference is now is that now they have more options. And if you're selling, you're trying to sell closer to this number. So this number might be able to be, played with. Now, you go to a listing agent like myself, there's ways around this that can help that person. And I have to be able to talk to your bank, sit down with you. Maybe we'll have another conversation about that. So this is kind of what's happening now. And the fear is that the interest rate is going to, well, the interest rate is most likely going to go up again, and they might do it one more time. And I hate to say that, but if we go into double digits, now we're going to be looking at a whole different ball game. And buyers, we had an excess amount of buyers. Let's assume this is a scales from from buyer's market, excuse me, from seller's market to buyer's market. And we were way up here, red hot. I don't know if I'm still in the frame or not, but
You are.
we're way up here, red hot, and now we're kind of curving down. We're still in the seller's market. When interest rate starts reflecting higher, and we, for whatever reason, we do go into the double digits, then this will go into this here. Now we're in a buyer's market, okay? Because the sellers can't sell nowhere near to that unless they pay cash. Now this is the tipping point from neutral, okay? And the neutral is more like this. You got about 2 months or so. Okay, excuse my handwriting, it's awful. So once we get in this area here, now we got to be concerned and see what the heck is going on with the interest rate, and we got to see what's happening with a lot of other factors. But interest rate can devastate us, or it can help us normalize the market. So I hope that helps. I hope somebody understands this. So all right, enjoy, God bless, and maybe I'll try to make this a quick one. Bye.